Hello, and welcome to this episode of the Penny Lane Podcast with MapleStax. We go deep into his strategy, technical analysis, and how to constantly grow your account. Get your notepads out. There's a lot of great information here. Maple, hi. Welcome to the Penny Lane Podcast.
Hello. Thank you for having me. Glad to be here.
Thank you so much for coming. Justin, you're here.
I'm here, and I'm happy to be here, and I've been here for a while.
We've been missing you on the podcast, Justin.
Yeah, it's been about a week, right? Lots of travel here, there, everywhere. I'm leaving on a flight in about 2.5 hours.
Ooh,
congratulations.
Good for
yeah,
you.
We'll see. I'm not going to any cool conventions like the one that just happened in Orlando. Missed that one.
Oh, the FinTwit convention, right?
Yeah. Were you there, Maple?
No, I missed it as well.
They do any virtual events? Could you take part in them virtually?
I don't think so.
No.
Not as far as I know.
Maple, did you go to PGIR in Reno?
No, I didn't make it there either.
Did you have a conflict, or are you more of a keep my privacy kind of person?
I'm just kind of more of an introverted kind of homebody person. I just didn't make it out there either. Trog and Bear wanted me to come out, but I wasn't able to.
Listen, I feel that. I feel so much more comfortable talking to people on the podcast than I do in real life.
Right,
Really?
yeah. I talked to people all over the internet, and I guess making the trip out to Reno just wasn't on my radar.
Have either of you ever been to Reno? Has anyone ever been to Reno?
No.
No, I haven't.
Not.
What an interesting place.
Have
I
you
guess
been,
it's
Justin?
mini Las Vegas.
I'm trying to decide if it's on the bucket list or not, just because of how unique it is. I don't know. I'm undecided.
Okay. Well, let's get on into the interview then.
Let's do that. Yep.
Okay.
Perfect.
So, Maple, I wanted to take a moment just to talk to you about, I have been really struggling in my trading after having my best day ever, my biggest win ever. I was doing so well during the DWAC fun run. That's funny. And then I really haven't changed the way I've traded, but I have just been taking like fairly big losses since then. And so many people in the Penny Lane Pod community have also been struggling with that. And I was hoping that you could offer some advice.
Okay, perfect. I think that we had an amazing run with the DWAC and Fun and a few of the other Trump tickers that were set off. There was that Black Rifle Coffee Company and as well as BKKT and a few others, which provided great opportunity to, one, build your account and take on kind of trades that you're able to hold on to for hold on to those winners. But I think it also provided a lot of bad kind of implementation into people's trading strategies, whereas maybe you have a very strict set of rules and that you go through and trade by every day. And holding on to these runners, even buying high, selling higher, that concept to newer traders can be a bit mind-boggling. But it really just ignited the market that week. And I look at it as advertisement towards a lot of newer money, simply due to the fact that they're going to maybe deposit more, maybe take on bigger or larger position sizes, and try to hold for longer to capitalize upon that kind of run. And what we saw the following week was a very large chop fest. A lot of tickers not holding up on their trends or their formations. I myself had a great week on that DWAC and Fun rally week. But on the following week, I had a rather large loss on Monday on ABVC. I had kind of oversized and was looking to make a large kind of move on a reversal, and it ended up biting me as I didn't respect my stop. Thinking it was going to reverse and just kind of being blinded by that euphoria from the week prior.
So, do you long and short?
I don't really play to the short side too often. I will every now and then. I trade on Thinkorswim, so it's not the best for locates or even
No, it's
in
not.
general. But once I start to focus on it, I'll probably move over to Cobra or something like that. But primarily, I'm a long bias trader, but I'm not a perma bull or something. I will play calls and puts on options and stuff like that. But mainly a small cap commons trader.
Like, what percentage would you say is commons versus options? What percentage of your
Percentage
trade?
that I trade, probably about 90 to 95% small cap commons. Slowly venturing into options, just not something that I've focused on. I do believe that I have the technical ability to trade them. It's just something that I've prepared for this kind of winter small cap rally this whole year, and that's just what I really want to maintain and focus on for the time being.
So, do you think it has started?
The rally, I think
Mm-hmm.
that we're seeing little hints here and there
Mm-hmm.
with consumer numbers coming out and seasonally being a strong kind of few months, November through January, late February. I think we're getting on towards the cusp of that
Okay.
rally, but I will respect that there is that chop, and I will always gauge and assess the market environment, and always trade the chart in front of me, no matter what. If it's a very slow month or if it's an overly bullish rally month.
Well, that makes me feel better because I'm like, we're in the meat of like what's supposed to be this hot fall market, and like, why is it not working for me?
Right.
But I appreciate knowing that you don't think it's maybe started or is in full effect yet.
Right. Yeah. Yeah. We're just slowly getting there. We do. There are opportunities in the market every single day. I say that to pretty much everyone, whether or not you miss a trade that you had planned or just through neglect. There's always going to be that opportunity. I myself traded PPSI this morning. Took it off the news, and it was a retest of that opening pop. So I got an entry near $4 and sold it all the way up close to open. Was able to re-enter on that pullback, that reversal, and I waited for the trend to come into my favor. I'm a big advocate of not trading against the trend, and always thinking about the short perspective.
Okay. Well, I mean, that was what percent did PPSI run today?
I think it ran over 100%. I took
And
it
we
in
Wow.
pre-market over. It was close. I think it hit 777 or something like that.
and
It
so
ran over
we
200% today. Yep,
okay.
from previous
Okay.
day close.
And that is what we need for sympathies, right? Are you a sympathy trader?
Yes. Oh, yes. Of course. A lot of people are against it. I do believe that you should focus on the main runner. But like I said, there's always opportunities elsewhere. If PPSI ran, the first kind of tickers that ran to my mind were other kind of either generator or hurricane stocks like Pola or OPTT. And with those, we did see some nice movement, and it provided two opportunities for a kind of set and forget trade.
Well, I know that like we Real Simple Ariel is a huge Penny Lane pod. He's been on twice. Everyone loves him. He's been so honest about his trading strategy.
Yeah, he's a great
And
guy.
yeah, the best. And he made his millions by trading sympathies. And they just they haven't been working for a while. So I know that there's a lot of people anxious to get back into the sympathy market.
Right. I
So
also think
hopefully,
that just remembrances from last year's COVID market. Um,
oh no.
I think that there's a lot of remembrances from last year's COVID market where, let's say one sector was running and that ignited the rest of the sector, whether it be EVs or anything else like that, oils. I think that we're getting close to that market now. I am seeing some sympathy plays being panned out and respected, right? There was I don't know if you can call it really a sector, but I don't know if you guys played like the pet tickers, right? Pet Z, Pet V. Yeah, Dog Z. A lot of those, right? Pet Z ran, and I was able to trade Dog Z
Oh
for a nice
yeah.
run. Pet V was making a nice move. There was and a few others that people ran to. You just have to be somewhat quick when you reach those, right? They may not have the same kind of explosive kind of rally like the main runner, but you are going to be able to capitalize upon them if you can think on your toes and run over to those sympathies rather quickly before anyone else gets there. I saw Pet Z ran, was trading that, and then I was able to run over to Dog Z. I saw it stuck at 450. It had a large volume bar, and I just took 450, trading it off the whole dollar, and was able to scale out rather quickly over 480 to 490 for a quick little 10% run or so.
So where are you trading mostly during the day? Like, which Discord are you in, your Patreon, or where do people find you?
Well, they'll find me on the Atlas momentum floor. I also post on the Atlas trading floor, the main trading floor, and I also really focus on my own Patreon. We have over 200 members, and I make calls throughout the day. And there's a lot of skilled members in there that have earned the right to be able to post and make good calls as well. But
Fantastic.
yeah, mainly, I post a lot on the Atlas momentum floor. I guess you could say I was raised there. Bear and Rodessa and Trog, they all kind of helped me and guided me towards, day trading small caps.
Well, we talk on here a lot about how many incredible traders were born in Atlas. So what a cool thing to be on the floor. How long did it take you, like, from the time you joined to be able to post like on the trading floor? That's like a dream come
Oh
true
yeah,
for
it was
everyone.
yeah, very very recently I was able to post on the trading floor. I went through a bunch of different channels, went through large cap options, went through the short floor was rather new at the time, the swing floor, and just a bunch of different channels in Atlas. But what I could really align with and wrap my mind around was day trading momentum small caps, taking, cheaper priced stocks and day trading them, taking them for a quick run up, and either taking a majority or all my profit. If I take a majority, I typically leave a small percent to ride those free shares, quote unquote free. But I spent a lot of time talking with Rodessa and I don't know if you guys know Scalper Ryan on Twitter.
Oh yeah, he's been on the podcast
Oh
before.
yeah, he's great. Yes,
Yeah, love him.
yes, two of my very very close friends that helped me and guided me along the way. And it really came down to me asking a ton of questions, bothering a lot of people, and whether or not they respond, I was going to get some kind of information from their posts or their charts that they posted. And I came to Odessa and I asked him, how can I, improve my trading? And what it came down to was he asked me right after that, are you charting every night? And I wasn't. This was about a year and a half ago. I told him I wasn't charting every night. I didn't know really how to chart, nor was I confident. And with that, he explained to me the importance of charting every night, and not only charting tickers, but also keeping in mind and track of your emotions throughout the trade, throughout the day. So through a lot of hard work, posting hundreds of charts in it was previously known as Scalp Team, posting
Mm-hmm.
hundreds of charts in Scalp Team. Bear and a lot of other higher ups thought it would be nice to bring me up onto the Momo floor or the Scalp Team floor at that time.
I love that. And that's such a common theme through the podcast. We've heard that over and over again, that it's like the squeaky wheel gets the grease. Is that the term? But like making sales. Making sales is absolutely an incredible trader, and he, I think, is the most famous for just saying, like, he was in people's DMs asking questions. If he didn't know something, he was going to figure it out, or he was going to find the person who knew the answer. And that's just been such an incredible theme through this. And I've learned so much from that, like, I used to be afraid to ask a question because maybe it was the person would think that I was like dumb or something.
Right.
And you can't be afraid of that.
No,
That's how
not
you
of course
learn,
not.
is by asking questions.
Yeah.
So really
Everyone's
appreciate
ignorant at
that
some
in you.
point until they're not.
And the fact that you have this Patreon where people can ask you questions. When did it become apparent to you that you wanted to teach?
Well, I was just really flooded by DMs. I have respect for everyone who has the courage to, message someone higher up or someone that they admire or would like to emulate their trading style. But what it really came down to was that when I started trading, there's a vast amount of information out there that I just wanted to dive into. And a lot of newer traders, they just want you to, tell them to do this, buy this, whatever else. And I couldn't respect that. I was very kind of dedicated to those traders that, asked the more in depth questions and really had felt like they had taken it more seriously. So I wanted to open up a group where we could all focus, share ideas, show them my kind of you know my strategies and tools that I use on a daily basis to kind of sculpt them into an independent trader that wouldn't need to have to rely on a Furu call or any other kind of Discord, right? I can come in, not open Twitter, not open Discord, and simply just trade a chart in front of me. Now, I do use Discord and Twitter and a few other tools, but I'm very confident in my technical ability and seeing traders yearn and want that kind of independence. That's what really pushed me to open up a Patreon. And we have over 200 members now. We've been open for about 3 months since the end of August, and it's been a great journey. It's been amazing to help these traders more in depth and really see their progress along the way.
What's the biggest thing that you have learned from one of your Patreon members?
I think one of the biggest things that I've learned from the Patreon in general is that we all face very very similar, if not the down to the very same problems. Most traders overcomplicate things, and they're either biggest problems I see FOMO chasing, oversizing. Not having earned the right to size up and still trading that size, really just throwing and seeing if it's going to stick or not, taking entries in that kind of manner. So when it really came down to me realizing that, hey, everyone's going through the similar issues when it came down to a basis, I started writing a lot of things. I just recently started putting out those threads on Twitter, probably about a month and a half ago or so, and it's been great to share that information that I thought was so kind of basic and common sense. But really, what it came down to was is that traders just needed something to have a simplistic understanding of how an experienced trader was approaching the market each day.
For sure. And thank you for leading us into that. Could we please go through your thread that you just posted on Twitter of how to build an account? I think
Sure. Yeah.
everyone would like to know how to do that.
Yeah, most definitely. Now, I also think that this goes into account with what I was saying with oversizing and either revenge trading, trying to get your money back, or just trying to compensate for missed trades or failed trades. So I wrote this in hopes that this would help anyone out there who read it. It's really just a kind of strategy or mechanism that I use on a daily basis. The basis of it is scaling in, and I really love this strategy because it allows me to not take a trade with too much haste. It gives me time to analyze the movement of the chart and gives me a proper risk to reward, right? A low risk and high probability of reward. But I also want people to understand that we don't have to hit, 50, 100, 200% gainers to make your money in the market. There's plenty of traders out there that take base hits each day, and they size proportionately to be able to sustain their kind of lifestyle just off of these 10, 15, even 20% runners. I've seen some traders just trade SNDL for penny moves to the long and to the short side and make hundreds of thousands of dollars. Duffel, for example. I don't know if you guys know Duffel. But on the thread, so this was a very simplistic kind of a basis of my everyday trading strategy. Now, this is I've tweaked mine a bit, and going along with this strategy, you should be able to develop your own kind of tweaks here and there, your own style to trading. Sometimes I'm too aggressive, and sometimes I'm patient, so I'm able to adapt to either side. So just going through the thread, just going over the kind of the top of it. But I scale in. I normally scale in a quarter position at a time. So let's say a normal position size, for example, 100 shares. Okay, just for example purposes. You should scale in, right, 25 shares at a time after you have identified a proper level to base risk off of. Now, I'm not talking about just a little wick here or there, but really kind of a pivot point where price is reversed very strongly off of. And I normally mark a horizontal trend line on the chart just to see. I don't take a position. I'm not trying to chase bottoms. Fortunes are lost every day trying to pinpoint bottoms. So I'm really looking for a higher low confirmation, maybe a double bottom, something to show me that current support level is going to be respected. And once I find that current support level being respected, normally I have little orders, those 1/4 scale-in orders, spread as close to support as I can. Right, I want the lowest amount of risk with the highest amount of probability. And if the trade does go against me, I'm typically looking at a 5 to 10% stop loss. You guys have heard that plenty of times. But to touch into position sizing, let's say that you should only be really using, if you're a newer trader and you're in the learning process, you really should give yourself a chance, and you should be able to size no more than 10% of your account into each trade, and that aligns with that 5 to 10% stop loss. Because if you do take a 10% stop loss, a tag on a trade, a losing trade, on 10% of your position or of your account, you're only risking 0.5% to 1% of your total account. So it's not going to be a detrimental loss, and you'll be able to rebound and have plenty of other capital to take on other trades throughout the day. So once I scale in a quarter at a time, ideally I want to see higher lows being stacked here, or some kind of bullish movement, maybe a higher high is being put in. I'm always gauging the micro trend of the trade. And a lot of people mistake the microtrend as the 1 minute. The microtrend really, to me, is any kind of small time frame pivot points on. I like looking at the 3 or the 5 minute. The 10 minute is much more clear, but sometimes in day trades we don't have that allotted time. So once I am scaled into a trade, of course, we should have our targets listed, whether that be high of day or an intermediate resistance or a daily resistance, any kind of level of that you feel like short could base a reasoning behind selling at that price point, or a long taking profit. You should try to always um, trading is really the embodiment of body language displayed onto vertical box and whisker plots, onto a chart, candlesticks, down to the very basis of it. We're trading against each other. There's a dialogue throughout the day, and if you're unable to read that dialogue, you're going to get caught into that chop that a lot of people have been experiencing the last week. So that's why I love scaling in with a defined risk area, and always finding my targets first, because that allows me to have an edge into the trade. I know if A occurs, then I will do this, and if price reaches this target, then I will do this. It's very methodical, and gives you something to base your trade on, rather than entering based off of, hey, I think I should enter here now, and then selling when one either it feels good to have that profit, or see that kind of gain in your account, right? That kind of euphoric scale, and also trying to prevent that forced realization that Mark Douglas talks about. Forced realization being that when you do or you are experiencing a losing trade, it reaches that point to where you're forced to realize and accept that pain that comes with that major loss, right? Bag holders. That's really why we should lose no more than 10% of our current position size. So, moving forward, now that we've covered that risk and kind of reward, I typically never trade a one to one. Now, if I'm scalping, that's a different story, right? I may have to take normally when I'm scalping and I take an entry, the reward may only be one compared to the risk. But if it does go to my into my favor, I will move my stop up to break even if it continues on forward or after it wicks me out. That's just the basis of my rule. So always risk is a huge factor in my trading, and it should be a huge factor in everyone else's. I have this here. This is number 5 on the thread. It says, while this may seem like common sense, most traders fail to take these short and simple steps when taking a trade. They enter and exit a trade based off emotions. This is unorganized and chaotic. Um, and if you don't have your entry price, your stop loss, whether it be mental or a hard stop, and targets where if it reaches you will scale, then you have no business entering into a trade at all. A lot of people will just you know take one big lump sum entry and hope for the best, and a lot of times that leads to bag holding because some people don't reach that forced realized kind of loss. Now, once we're in the trade, and now not always, you're not always going to get full position size, and I wanted to kind of make that a large note because a lot of traders will once it breaks out, and maybe they only have a starter, a quarter position, or even a half position, and it breaks out in a very kind of volatile manner. They'll start to slap to get that full position, and what that really does, it goes against the plan that you had laid out. It messes with your average, and then you're now trading dictated by emotions or by emotions. So and that never really ends up well.
Wait,
Um,
I feel like I do that all the time.
yeah. Okay. So a lot of traders they have this plan set out, and if the for me a big rule is that if it moves without me or it moves and I'm not completely filled, then what I have is what I have until I can come up with another plan. And these plans typically take me a few minutes, sometimes 5 minutes to kind of analyze and
Uh-huh.
assess whether or not I want to take them. Whereas if you start to slap into a trade, you're just chasing that profit and really breaking up your entire plan and your rules. So
Fascinating.
yeah, so if you're in a trade, we must execute our trade to plan. Now, I've had plenty of swing trades where I have great entries, and maybe I'm just being lazy or impatient. And this happened to me last week on SPIR. I had this trade plan, had no reason to stop out, was just really bored of the ticker, and I cut it. And then the very next morning, they have that NASA PR, which I would have made a good kind of trade off of. And really, when you're into a trade, it either takes your stop out, whether that's your original stop or the stop that you have moved up along the trade, or you scale at your appropriate price targets that you've laid out no matter what. Now, if you have accounted into your chart or into your trade that you will kind of portion a bit of shares to leave to ride, then that's what you should stick with. A lot of times that can be kind of a negative aspect on newer traders, simply due to the fact that maybe they're holding a very small portion and they feel like they're missing the move on the way up. So they keep adding, and then they turn a winner into a loser,
Yep.
which happens every day.
Okay, so let's say that so I like to buy off the 20 EMA. That's a huge part of my strategy. So let's say I've
Okay.
been watching this stock all day. It's been holding the 9, like it's really strong. It's building higher lows. It's all the things that I like. And then it drops to the 20. Like that would be when I would ideally take like a fairly large position if I've been just watching it and like there's my entry. Are
Okay.
you saying that it would be, and then like I put a stop under the 20 and like with enough room in case it wicks or whatever? Are you
So
saying that you would scale into that position?
I would run it back to me when I was explaining, always gauging and assessing the current market environment, and also gauging price action. A lot of traders have this problem as well, where maybe they set a demand zone or some sense of support level, and they'll blindly place an order there without taking into account price action. So I'm always gauging the front side of the trade and the back side. That kind of that dialogue between longs and shorts. Am I fighting the trend or am I trading with the trend? And
Right.
if something is coming down very steeply, I always have to realize that not every trading strategy or tool or indicator that I use is going to be respected on each trade. If your plan is to take your position size close to the 20 EMA and you feel like that it does have a sense of confirmation or continuation, and if that's what you truly feel, then you should take that trade. And if it works out in your favor, it's there's a lesson for you. And then if it doesn't work out, that's also a lesson in the fact that maybe I took this with too much haste, or simply just traded based off of an indicator and didn't have other levels of confluence, kind of guiding me into that kind of trade. For me, I typically like to see two or three levels of confluence. The more, the better, when taking a trade. And really, what that does for me is aligns multiple points of view from different traders that are looking to take the same trade, and seeing that as a confirmation across the board.
So you wait for other people to confirm what you're seeing. Is that
Um, well, not always. Like this morning, today, it's November 8th, or yeah, November 8th, and I traded PPSI this morning. I'm a very a strong pre-market trader. I love trading news, and on that news, I had missed the initial kind of pop, but I was looking for a retest of that high. That high being $4. I don't know exactly, but it was right at $4. So we broke through that previous high, and then we came in based. So that's a break in base. And then we also had the nine EMA on the 1 minute coming through and supporting that, and it was also right back again on the four whole dollar. So I like to take trades very early momentum off the 9 EMA on the 1 minute if we have strong continuation or good news. I also like to trade break-in bases. A break-in base concept is a break of the short kind of resistance, and basing upon that resistance, turning it into new support, taking those covers away from shorts. So those are two levels of confluence there, and also the four whole dollar. The four whole dollar, you typically will see bulls come in and try to trade around that. I like a 10 to 20 cent range under the whole dollar to be maintained, and if that is maintained, it shows very strong bullish confirmation for me. So I'm not waiting. I'm really just analyzing and thinking of different points of view throughout the chart always. I use VWAP. I use whole and half dollar Sykes. I use supply and demand, support and resistance. I use the 9 and the 20 EMA. I use the 10, the 50, and the 200 SMA on the daily. There's a lot of different things that I'm looking at throughout the day to make sure that I'm putting my money in the best possible place.
for sure? Well, I mean, I do like that. That also takes away like making a knee jerk reaction, right? Like it seems like you're very methodical, planned out. Like if you miss the move, you miss the move, but you like want to have all your ducks in a row before taking a trade.
Oh, of course.
Yeah.
Yeah, even on PPSI, there's always opportunities. When it had that rally, it had broke over $8 and $10. It came back and retested. I think it was about $9.40, $9.30. Scooped up on the 5 minute, 9 EMA, and that was an area, right. And it was also a support level was being based there, and it was we were looking for the $9 whole dollar to be maintained really strongly, the half dollar on the 9. So um, there's a lot of analyzation that goes through my kind of trading strategy, but I really try to keep it as simple as possible, focusing on the runners of the day and any little scalps between here and there. And when we're in a trade and the trade does work
Perfect.
to our favor, I'm constantly moving my stop up. So, on that ride up on PPSI this morning, I was moving my stop up along the way. If you have a $4 entry and it runs up to $6 or $7, I'm not going to stop back out on the remaining portion of my shares. Near 4, I'm going to move that stop up, either in the half or whole dollar strike. So very important to move your stop up along the trade. If you're looking for a day trade, I enjoy day trading, but also we'll look at kind of trading around a core. So moving forward, I've said here making 5 to 20% on a trade is great and should not be taken for granted. These base hits are what will build your account and your overall consistency. Take what the market will give you. It's a game of longevity. Those who keep their seat at the table will prosper. And I think as any trader, as long as they don't blow their account up and they can give themselves an actual chance in trading, being taking smaller position sizes or really analyzing the chart before they hastily jump into a trade due to FOMO or
Mm-hmm.
any kind of big green rally stick. Focusing on these base hits and seeing your account grow, whether it be 5 to 20%, you can make your living off of that each and every single day. If you have a $1,000 position size and it goes 10%, right? There's $100. You can constantly and consistently make those trades, and that's something that you can base and develop a strategy upon, right? Later on down the road, once you've compounded those gains, you're going to be able to size up, earn the right to size up, and you'll end up making more money off of the same tools and strategies that you use trading a small position size. To continue, I'm really an advocate for reviewing your trades each night. I go through all of the trades that I have taken, whether they be winning trades or losing trades, and also trades that I missed. It's really important that we know why a move ran and why a move didn't work out in our favor. Maybe we were looking at the wrong point of view or thesis, but reviewing every night, not just charts but yourself, is very important if you want to be successful trading. And what I mean by reviewing yourself is I write notes throughout the day of my emotions that I experience throughout trades, just to kind of gauge, how I'm doing and how I'm feeling. If I'm, maybe too angry one day, and that's the reason behind taking revenge trades, or if I'm just kind of too trigger shy or gun shy with taking trades that day. Maybe I was, fearful of dips that morning, or whatever it may be. It's very important to just keep track, journal, whatever's going to work for you, so that you keep kind of realization of yourself and understanding, and bring those problems that you may be experiencing, to paper, or personalize them. So I have an example here. I guess those who will view this thread on Twitter will be able to see that. But it shows a very nice example of identifying support, then scaling in, and then scaling out along the way at our identified targets, and then stopping out about 10% above our entry with a moved up stop. So I do hope that helps any kind of newer traders out there, and it's really just a basic plan that you can customize and kind of change in regards to your style.
Yes, absolutely. And I think that that's so good for people. Like, people need a plan, and that's a very well written plan. I also will link to the thread in the show notes. So if you want to go through and reread it and, digest it some more, please do that.
Awesome.
Moto Mikey says, I just want to comment that he has saved me from getting caught in many knives. I always hear in his voice, if this stock is so bullish, then why are there so many upper wicks on the 5-minute candles? I guess
Yeah,
that's not really a question, but great point.
Yes, I actually I got that from Brady. I was That's just something that has stuck with me. Watching his streams, Brady VPA on
Uh
Twitter.
huh.
He was saying that in one of his streams, and it really, it made a lot of sense, right? A lot of times we will blindly ignore, these large red flags that are in front of us, simply due to the fact that we're so in love with our current trade thesis.
I love that. And I am also going to start looking. I do look for those, but I have not placed like quite as much importance on them. So I'm going to start adding that to things I look for.
Yeah,
All right.
of course.
Sherlock Stocks says, when you are in the heat of the moment and you are very confident in a trade that has hit your stop loss, how do you respect your stop loss when your confidence is telling you the opposite?
So the I guess your intuity is very important when kind of gauging a trade, and we shouldn't disregard it. Sometimes there's those red flags, like I was saying, that we should watch out for, and sometimes we feel like our entries are too high, but we do feel like the trade is going to work out in our manner. Now, there's no true way of knowing that. And if it does come to our stop, we really have to make a decision if we're going to leave a little wiggle room under that kind of stop, or what I personally like to do is take a half stop, right? Sell half of my position. And a lot of traders don't think about that, scaling out on your stop rather than taking your whole stop, just ripping it
Uh
off
huh.
like a band aid. Sometimes you can gauge current market momentum, if it's going to continue, and just maybe sometimes our entries are too high, but our trade thesis is correct.
So let's say you hit your stop. Let's say you had 1,000 shares, and you hit your stop, and you sold 500 shares. If it pulled back a little more, but the trade was still going in your direction, would you add back the 500 at a lower price?
Yeah, I was just going to touch on that. Yep, you can add on maybe a support confirmation or a higher low confirmation, something that is going to give you a basis of risk to base off of. Sorry, that was worded strangely, but you're going to be able to confidently take that trade, knowing that, hey, if this price level breaks, whether it be a previous supply turn demand or an EMA or anything along those lines, that if I'm wrong and I enter here, I know that the other buyers are also going to stop out, so that I should be confident in taking this entry at this price level.
I really like that. I like taking a little risk off, but you still like I use a hard stop and I'm like, if it hits, it hits and I can buy back in lower. But sometimes it hits and does exactly what you thought it was gonna do.
Right.
So
One thing that a lot of that I found a lot of success with. It's called the 84% rule. It's from I think his name's Jared from Live Traders, but it's just something that I've implemented into my trading strategy and pushed onto a lot of other of my members in the Patreon. But it's called the 84% rule, and the 84% rule really just says that when let's say we have an entry and we have our stop laid out, and it price takes our stop, whether it be a mental or hard stop. And if price were to come back to your entry, meaning you got wicked out or a stop loss hunt for your shares, you should take your entry again. One, to negate that loss, and two, it comes down to that our thesis was correct on the trade, but maybe we entered too high. And 84% of the time that will work out. I'm not sure of that statistic, but for me, it works quite often when I do get wicked out of some shares, maybe off of open. Um, Sometimes we'll see that dip and rip on open, and a lot of people do stop out just to have the price reverse right in front of them, like they had planned.
love that. I'm learning so much. All right. Cooking with my cat says, I'm so excited for this. I always like to hear about the beginning of traders' career. Did they struggle? What was the turning point?
Yes, I struggled a lot. I had I had quit my job selling cars, working 10 to 12 hours a day, 6 days a week, and was really looking for some kind of sense of financial stability and income that I could create and obtain at home. a lot more free time. I was tired of working day in, day out, having that one day off, and not being able to truly kind of relax or enjoy life. So I downloaded Robinhood like most other traders do. Their first kind of startup, and I struggled a lot. I was taking calls off of Reddit, taking calls from multiple discords. Taking that one lump sum kind of trade, buying alerts, which a lot of alerts are already the risk to reward is very hard to gauge, and most of the time the reward is not even there. So I struggled a lot uh, for about 8 months to 12 months. My first year, it was where I started to see a turnaround, simply due to reviewing each night and taking it more seriously rather than, hey, I want to throw money into this ticker and I want it to pay me. Right, I needed to understand the action behind that and the reasoning why these traders were profitable and I was not. Um, I went through a very large or very long losing phase, even before I was break even, and I feel like that's where a lot of traders either make it or break it. You either accept the fact that, hey, you're not where you are in your trading journey, but with persistence and constant studying and reviewing and the proper kind of positive mindset, that anything was possible. For myself, right, I was just another member in Atlas that joined, and now I post on on both floors, momentum floor and the trading floor. It's very crazy to see, my name typing amongst PJ and Ricky Bobby and Verde and a bunch of other people that I really respect and looked up to, and still look up to on my current trading journey. So yes, I did struggle. If anyone tells you that they didn't struggle, they're lying, or they got lucky. And if they got lucky, they're going to struggle at some point. I really value and keep a sentimental kind of relationship with the fact that I did struggle for so long, and it makes all of the success and in trading that much more enjoyable and rewarding.
For sure. If you didn't struggle, you're not doing it right.
Of course.
All right. Critter83 said, I struggle with pre-market entries. What's his favorite pre-market setup and how do we avoid all-day faders?
My favorite setups in pre-market are maybe I see a large rally in the day prior that turns into either a channel or a downtrend break that's imminent during the extended hours kind of a session through after hours and pre-market. And really what I'm looking for is anything to base support off of. So in that channel, it's going to provide me with two scenarios. Um, if it maintains that support level of the bottom portion of the channel, then I will be able to get an entry close to that and have rather low risk. And if it breaks to the upside, if I don't have those entries, I'll be able to take a breakout buy. Now, a breakout buy, um, they can be risky. I don't full position size into a breakout buy, and I will keep my stop very close to break even, if not right on break even. Now, Rodessa calls this a close to the gap strategy, but it's when we see price gap up in the morning, and then it's slowly getting pushed down to create a downtrend break close to market open. And all that does is push. It's that ebb and flow of the market, right? Bulls have pushed it up to where shorts have the better risk to reward. They have the edge, and shorts push it back down for another rebuttal from the longs, and they of course cover and wait to rinse and repeat. So those are two of my favorite setups into pre-market, um, and to prevent all day faders, I think sometimes we have support levels drawn out in pre market, but maybe they're on the 1 or 5 minute and two zoomed in. I'm always looking at multiple charts on my screen. I keep four up as well as um, I think 10 more other charts that have tickers I'm just watching. And I have the 1 minute, the 5 minute, the 1 hour, and the daily, and I swap through all of those charts on different time frames. So I think it's really important to zoom out and look at your 1 hour, maybe your 2 hour, 4 hour, just to see where price truly is in the trend. Are you buying near a resistance level, or are you buying near support where longs are going to be interested? So to prevent an all-day fader, and to prevent yourself from sitting in an all-day fader, you're going to be able, or you're going to have to, right, find those proper and accurate support and resistance levels, and make sure that you respect your stop. There's no reason to take on unnecessary losses from an all-day fader. You can simply just exit the trade as soon as a support level is broken in a small area under.
All right. Bryce wants to know about playing breakouts. Specifically, what are some of your favorite chart patterns on the 1 and 5 minute for breakout ads? Conversely, where would you set cut levels for those same entries?
So I touched on that in the previous kind of mention a little bit, but on a breakout, I like trading pre-market high breaks. I like trading those downtrend breaks. So a lot of people may call them descending wedge or a flag, or anything like that. Anything that has a clear downtrend that is closer towards the peak of that triangle or whatever formation you're looking at. And if I don't have an entry close to support right on the base of the wedge or anything like that, then when I do take a breakout buy on that downtrend break, I will keep my stop as close to break even as possible, and I also don't size in as heavily, because on a breakout buy you have to be in the right market, and I think in this current market, breakout buying is the kind of lazy or easy thing to do, unless you have a very strict set of rules and you can abide by and be obedient to your own kind of strategies.
Abra wants to know how to find the stocks where smart money is accumulating shares and in the next few days it becomes a runner. Or how do you find the next runner before it runs?
I look very closely to front loads or preloads, people will call them, anything that pops up with a large amount of or irregular amount of volume. And I want to watch that reaction very closely. It shows that a larger participant is in the market, and that participant is will wait and sit on this until it lights up scanners. So what I'm looking at on front loads, any kind of irregular volume that pops up price rather violently, and then it either comes back down to right where it popped to that support, or just maintaining that current trend. Or what you'll see is that it pop up and then it flag, or try to just consolidate into a channel. And with that, you'll see accumulation on the support side of the channel, and then really bulls waiting for that overall breakout. And all you have to do is, I look at things that ran into close. I look at little taps throughout the day, just little random pops on tickers that have previously ran. Traders and larger participants in the market will always go back to previous runners. And I think it's a great kind of process to be able to watch previous runners and see where participants in the market are interested, and areas that we should note to avoid.
Perfect. And then last question from Logan Trades is would love to hear his take on using VPA and volume price. Would love to hear his take on using volume price analysis and volume at price for swing trades. Can't wait for this one.
So for swing trades, really what I'm looking at, I'm applying all of the same strategies and techniques that I use on an intraday kind of time frame, or a day trading kind of time frame. And that being, watching the same kind of. I love to see tickers that are selling off, that have a point, that have pushed to a point where the risk reward for longs is very interesting, and watching to see where that volume starts to trickle in. So it really touches back to what I was mentioning On even those pre-market formations, right? Those pops before into close. If you see a random or irregular amount of volume on the daily, I saw a few weeks ago, I caught the CPHI run at 65 cents and wrote it over $1. And that was simply due to the fact that it had, I looked on the daily chart and saw that it had about 8 times the average volume displayed on this ticker, whereas the last either few weeks or months, it had been very dry. So I had seen someone come into that trade and was able to follow their movement on that. And also on VPA, if you have a formation on the daily chart, maybe it's a downtrend or a descending wedge or some kind of channel, right? These same kind of formations that we've been talking about. I'm looking to see where the selling pressure eases and where the selling pressure is very persistent or more increased. So if it's coming towards support, I know that I need to be watching volume either on the hourly or the daily chart just to kind of see if we had a ton of selling pressure near our support level and try to gauge whether or not longs were going to defend that current trend. I'm always, you know, kind of analyzing the relationship between long bias traders and short bias traders because both sides make us money either way that you're trading. So with VPA, you really can go and delve into it. I love Anna Cooling's book, or both of her books. Tons of great examples in there that you can apply not only on a day trading or not only on a daily chart, but also swing trading doesn't have to be just on a daily chart. You can swing trade an hourly setup and kind of be in and out of that trade within either a day or two.
Perfect. Well, thank you so much for your time and your expertise. I've loved this episode so much and have learned a tremendous amount.
Awesome. Thank you so much for having me. It's been a great experience, and especially it being my first interview.
Yeah, I'm just so happy you came on, and I hope you'll come back.
Yes, I will. I'll definitely be back if you guys will have me, and I look forward to it.
Awesome. Thank you.
All right, thank you. You guys take care.
Thank you to our producer Joel Edwards and Chesley Lowe for our banjo music. See you guys next week.
By accessing this podcast, you acknowledge that the Penny Lane Podcast makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional or financial advice. Unless specifically stated otherwise, the Penny Lane Podcast does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the Penny Lane Podcast. The Penny Lane Podcast assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or on third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein.